Hello and welcome back to the XM studios here in Sydney. I'm here with Peter McGuire and we're going to be talking about the week that was and the week that will be. Pete, what's been happening and what are the signals that you're looking to drive into this conversation?
Well, good morning, Will. I think that it's been a wonderful week in the sense of retrospect. We've got a ship that's
the Suez Canal.
I mean,
what do? You want to control an oil price? You go and block the Suez Canal.
Absolutely. I mean, this is just unbelievable. You couldn't have written the script. The secondly is you've got volatility across that whole crude sector. We've been up and down 7 and 8% moves over the last week, and they're just a trader's delight. We go to bed at night here, and then all of a sudden New York, the big boy, opens up, and then it just gets whacked to the downside, and then you might see a 2% move to the upside on the next trading day. You've got the US dollar in that 92.6, 92.8, really honing in for that Easter trade at 93. That handle is just incredible. So that's had a big move up, considering where Biden was at the inauguration. Within 2 months, we've gone from that 89 back to 93. So dollar, currency's been smashed down, Aussie, Kiwi, and the host of others. So it's been a great week for trading, Will.
There's the week that was, and the week that will be still ahead of us. But if we think about what's happening around the world, we've spoken briefly about the Suez Canal, the blockage there, those ships, and all of that product is going to have to probably go back out and go around the Horn. That's a big issue.
Yeah, it is. I mean, I don't know how you back a couple of super tankers out, and of course they've got big oil and then some of those cargo ships. That Evergreen, when you're thinking of the dimensions, 400 metres long, that's just incredible. You hear about these, the Panamax and the Cape Size, and the futures are well bid up on those particular shipping size ships, and then what impact it's going to have as far as supply, the logistics, what's on board. There's even talk that they've got to actually strip some of that ship to actually take the weight off it. And how do they do that? I'm not sure. I mean, I'm reading information as far as Dutch companies coming over and dredging.
So what should we be doing? I mean, in terms of signals there, though, there's a couple of key ones there. We're talking about the maritime trade. Is there a maritime trade? Is there an insurance trade? What are we thinking?
I'd say it'd be maritime trade, but the Cape Size, we don't trade it, but Cape Size and the Panamax that trade on futures, you'd have to think Baltic Dry Freight Index, what impact that's having, and how long is this going to drag out for? Could it be a crimp as far as supply side for crude? Because naturally that whole feeding into the European market as far as crude, where you're looking at some of the foods coming through, other parts as far as technology. So yeah, it could be a very significant impact as far as the long picture drive of these particular markets.
Well, let's just hope any chocolate that was due to be dropped into any port along that particular route was out of there before this thing blocked up.
Yeah.
Mate, as we move around the world, third wave breaking over battered Europe. Why is Volkswagen playing the new Tesla? And you know what? There's a couple of reasons why Tesla and Bitcoin perhaps are shaping up as interesting conversations.
Yeah, you bet. I saw an analyst come out last week, a well-renowned, $3,000 for a stock or a share was the forecast for Tesla. So the youngsters that are trading it, and there's plenty of the 20-somethings that are trading Tesla, and they're just falling in love with it. It's been an almighty stock, and maybe there's significant upside yet. But when you're thinking about the powerhouse as far as Volkswagen and those big German brands, what they're going to compete, I don't think it's just going to be a one-way street for Elon. It's
No, I don't think so either.
Industry and how that all rolls forward. Competition, and there's only, I remember, at uni you talk about, a competitive advantage. 90 days was traditional. Well, when you're talking batteries and new age technologies, it might be 9 months, but they're certainly catching good old Elon.
EV, supply chain, rare earth, critical metals, strategic metals, all big conversations.
Not in the Suez.
Well, let's hope they're not there. I mean, let's just hope they're not there. Mate, as we dive in here, we look at the euro and the pound. We've spoken about oil prices, and we'll dive into the first graph up here. We're talking about non-farm payrolls, which are coming out in the week. Yeah. What's happening in this chart that we need to know about, mate?
Well, what's happened, Will, is we'll see probably a 500,000 handle as far as new jobs created over the last month. So that's always till the middle of the month, so middle of March, mid-Feb to middle of March, and then they host those numbers on the first Friday of the month. It'll come out early, I think, because of Good Friday next week, so we'll all be at church. And then the next side of it, of course, is that as that builds, then the unemployment number sinks from 6.3 to around about 6.3.5 to 6.1 handle. So they're quoting 500,000. We quoted last month 200,000, all the analysts, and they were only out by 90% because they hit 379,000. So they're all saying 500,000. If they're out the same, it might be 900,000.
Let's
wait and see.
Sounding a little like a weather prediction. You know, this might be a plus or minus 40.
Yeah.
Now, mate.
Sounds like a trader's delight.
As you dive in here and look at the next slide, we've got the Chinese manufacturing activity.
Yeah.
Spoke a bit about this last week.
Yes.
You know, look, there's plenty happening there, and not all good.
No, it's not. But then you're looking at that as far as PMIs, and when you're thinking as where we're looking as far as a number, anything above 50 is expansion, anything under 50, as we know, is contraction. It's bordering. It's just starting to be very close to that. 50.3, 50.4. I want to see what that looks like, Will, in around about May or June, and whether we're now under that almighty 50 number as far as a contraction. I would have thought that it'd be still up, heading higher to that 54s, 55s, but it's really shown the sentiment as far as markets.
Look, in terms of sentiment, I mean, what are markets saying about China? I mean, there's a lot of conflicting news coming out. Positive, negative, growth, maybe not so growth, stimulus, not so much stimulus. What happens when you turn stimulus off?
Well, I want to know what their numbers are as far as COVID. So what are they hitting as far as vaccines? Some of these countries are hitting big numbers that all came from China. So where's the answer as far as how many of their population at 1.4 billion have actually been vaccinated? Where are the outbreaks? What's the storyline? And where are we as far as, I think, that transformation, people being vaccinated and what impact it's having to that northern European and northern hemisphere summer.
I mean, there's some talk about the industrial strength there driving the economic rebound, but was it actually a rebound, or was it actually, pretty much just business as usual, or a decline?
Well, if you're looking at that chart and what we experienced in 19, it was just cratered, as we know, economic carnage, and then it bounced out there like a V, and there was no tomorrow. It just sunshine all the way through. Have a look what the Dow did. Have a look at any of the equity markets, and all of it now is, I do a breakfast show, and as you know that, each day out into Europe, and I talk about, we have different people on the chats, and Germany is a major concern. Merkel was saying we're going to have a lockdown, and now she's backtracked on that because of the feedback and the blowback from the from the economy and from the residents. So you've got the population saying, well, we don't want to be locked down, and we're seeing that, I think, conflict again facing into the United States and many other parts of the world. Australia is I don't use a mask now for anything, and that really, and this broadcasts across the globe, and we've got some people that they're locked down in Europe. They haven't been out of home for a number of weeks. So it's a different world that everyone's in a different position.
All right, let's jump forward. Having a look at this next slide, we're talking about the US versus Japanese yield. Treasury yields look, they're obviously up in 21.
Yep.
But what's happening in Japan,
Well, Japan's naturally, it's rising, and certainly, you've got a bit of growth off there, but it's very much been a flat line. It's had a little bit of a bubble up, but when you're thinking about the big side of it as far as US treasuries, they've really gone, gangbusters over the last 2 to 3 months. And Powell's coming out, Yellen's coming out. When do we see a rate rise, Will? You've got big increases as far as tax. I understand that the US is going to anything over 400,000 to a family as far as income, which is a lot of money. But I've now heard that it's 200,000 per person, and their income tax is going to go up this is what I heard, up 70% on their existing. So this is frightening. What it does
let's put a pin in that for a second. You mean they're actually on an ultra low base right now, not getting taxed anything, or they're getting taxed something, and we're saying it's actually going to be a lot more?
Well, they're being taxed something, and so say it's 30%, and you're getting an increase of on 30% by 70%. So 7 threes are 21. So that'd be 30 plus 21, it'd be 51%. That's the way that my mind works. And that's what I heard if you're in that 200,000 bracket. So then you've got what's happening as far as new age energies, what's happening as far as, and we're talking about the future, we're talking about in the 20s, which hopefully may be a roaring 20s, but when I'm looking at big tax, changes as far as climate, so we've got all of that to come through and what impact it's going to have as far as the economy. Then you're shutting down crude, we're going to import crude. I really think it's going to be a very, very mixed bag if I look into the future over the next matter of years.
All right, so you're talking 4 or 5 years out there.
Oh, maybe even sooner, because what Biden's been able to do as far as all of these executive orders in 64 days is, I think, it's taken the world by storm. absolutely world by storm. So it's going to be, what impact does that have to economic growth? What impact does it have to inflation and energy prices? And do we see a tick up as far as interest rates? What's going to happen to property prices? Imagine in Australia and New Zealand. Everyone's borrowing like there's no tomorrow. You've got prices absolutely parabolic. And imagine interest rates go up 3 or 4%.
Well, it's a different world.
A different world. There'll be blood in the streets, Will.
Blood in the streets, a buyer's paradise, depending on which side of the equation you're sitting on.
Well, it's always that, yeah. They say buy in doom, sell in boom. And they might be the correct analogy rolling across from property. We've seen that as far as equities, and we're seeing that as far as commodities. I think you've just got to have that mindset as far as when a market is fully priced, look at rental yields and look at what's going on in the future.
Pete, on screen now, Canadian dollar and crude, paralleling there, looks like it's a reasonably simple story.
Yeah.
Out of the Suez, blocked the Suez, and here we are again. It's still, it looks like it's been good for Canada.
It has been. Look, they've had a big rebound naturally, and so has crude. So that Canadian dollar's certainly strengthened, but it's come under a little bit of pressure over the last matter of a week and a half, 2 weeks, like the New Zealand, like the Aussie. So there's probably a little bit further softness. I'm concerned where that US dollar trades. I said it'd be a 92.5 handle a couple of weeks ago, and we spoke in depth on that. I'll go out now and I'll say, holding the hand up at about a 93.2. I'd be happy to see, I think it'll happen, a 93 by Easter. And that seasonality play. We always talk fundamentals, we talk technicals, and more importantly, I think a lot of traders are now starting to understand seasonality. Religious festivals, what's happening as far as Mother Nature, storms, what happens, you saw the dust storm and what impact that has to the Suez. We think about gold, we think about all of these impacts globally, and we're seeing that very evident in the crude price. All
right, well, let's wrap this up. We're sort of really hoping for a little bit of a delivery. We want the Easter Bunny to come. Pete, what's going to happen? What should we be watching out for? What's the signal that you're looking at right now that's going to make a difference in your trading week?
I think the US dollar. I want to see where that goes. I want to see what happens as far as the Suez. I want to know whether that's open by this time next week, Will, or is it going to be they're saying it could be days or weeks. Now, if this runs into weeks, that really, I think, snaps the supply chain on so many different components as far as the globe. Europe's a powerhouse, 500 million consumers.
So third wave going through Europe.
Yeah, well, there's the other thing. So really, I've got my mind very focused on that US dollar. I want to see where equities play and just the general sentiment moving forward. Whether we see a back off from Europe to say, hey, we've got the corona a little bit better under control. We've had the vaccines, and now we're opening up for economic. It's a privilege. I think to have it for this summer would be just outstanding, and that's what Europe needs.
Well, Pete, thanks again for talking to us today. Look forward to it, and I hope the Easter Bunny turns up.
We'll be at church every day, Will, and we'll be praying for your good soul and everyone else.